Good afternoon, everyone. Forex Breezio here, 2:45 on Friday, November 3rd. Hope everybody had a great week. And just back again with another video. And a little bit of a tweak on the last one I made where I talked about this moving average strategy. And again, guys, real simple strategy. Nothing groundbreaking here. But maybe a different combination of moving averages that you hadn't considered before. So on the video that I made on this, and I think it was last Friday, I was using a 10 period, which is this yellow line, a 10 period linear weighted moving average, which is a little bit more sensitive even than an exponential. Okay, so that's this yellow line. And on the last video I had this as a 200 period exponential, linear weighted also. And I decided to cut that back to a 50 period exponential. So obviously it's a much shorter interval, and I made it exponential, which isn't really all that much different than the linear weighted, but it makes it a little smoother, not so choppy, which you don't want on the longer period one. And so I was hesitant to do that because, again, one of the problems with moving average strategies is that you can get a lot of false signals. And it doesn't matter, the more clever you try to be about shortening the length of the moving averages, the more false signals you're going to get. But at the same time, the longer you make them, you'll get less false signals, but you'll get delayed entries often, and a lot of times you'll just be late to the party by the time you actually get the signals. So it's a fine balancing act. And the other thing is that moving average strategies are great for trending markets. They're not good for sideways markets. So if you really identify sideways price action, you don't want to use a moving average strategy. Okay, either don't trade that or find a different strategy. But moving average strategies are great for identifying entries in a trend and help to keep you in a trend and things like that. So excuse me, guys. I'm just getting over a cold. I apologize. I'm trying not to cough. Using these moving average strategies, ideally, the best, I think, time period to use this on is a 4-hour, and this happens to be the Canada Swiss, where you can use the 4-hour for your analysis. You can use the daily chart for trend confirmation. And then you could always fine-tune your entry on, say, the 1 hour or, something lower than that. But your primary analysis is on the 4-hour. And for instance here, when this 10 period crosses through the 50 period, so this indicates a potential change of trend at the close of this candle. And so you could wait for a pullback or you could enter here, whatever, but entry somewhere in here. And of course, you could trade this all the way down until you either reach some preset profit target or perhaps when the 10 period touches back to the 50. So, in this case, your exit would have been over here. And this also can allow you to find entries on the shorter time frame if you missed the initial entry. So this is a great reversal strategy because you can see price was going up and then it broke through and then you had this long move down. Okay? But for those of you that don't want to necessarily just swing trade, because the thing is like this looks great and there's a lot of pips here, but remember this is a 4-hour chart, so you're going to have to hold a trade like this for a long time, and if you're cool with that, that's fine. This is not a criticism. I said on the last video that I would prefer to trade this on longer time frames, but if you don't want to have to hold trades for, let's see, this is 122 4-hour candles. So that's 122 times 4. That's 488 hours. That's 20 days. So this is a whole month. Okay, you would have been holding this trade, this one trade. And, it turned out it would have been a really great trade. And you would have made, let's say if you got in here and you got out over here, it's 170 pips. But it took a month to get that. Okay? So I said, well, what if we do want to look at trading it on shorter time frames? And again, using these lengths of moving averages especially the 50, could potentially generate a lot of false signals. And the other thing is, for these moving average strategies, any of these moving average strategies, I would say that your win rate is probably only going to be about 50% or so. You probably can get it a little bit higher as you get good at identifying and not relying 100% on the moving averages, but being able to identify other price action formations to suggest maybe a reversal or a breakout that's not really a breakout, or a reversal that's not really a reversal. But just in terms of just following the signals blindly on the moving average, there's probably a 50% win ratio. And so it all comes down to having good risk management and, taking the best trades and not letting your losses be more than your winners. But 50% win rate still can be a very profitable win rate. Okay, so I'm not saying it can't be, but you have to practice good risk management. So, what if we want to try it on a shorter time frame? Let's say more of a day trading, not necessarily a scalping strategy, but a day trading to maybe a short swing trade. When I say short swing trade, maybe a couple of days instead of, an entire month. So anywhere, again, from a day trade, we might be out in several hours, or you could potentially hold it for, say a couple of days. So if we go down and say look at a 15-minute chart, and we use this as our analysis time frame, let's just look at a couple of these. So right in the middle of the screen here, we can see the moving average breaks below the 50, and comes back up, breaks below, and we have this push down, and then eventually we push back up. So I know I had this highlighted at the beginning, but this is why. Okay, so if we look at this area right here, this is clearly a corrective area. Anyway, you can see really small candles, kind of choppy price action. If any of you out there that are perhaps schooled in Elliott wave theory at all, this is basically an ABC zigzag type correction. Okay, a 3-wave correction, ABC. And, the B wave does often fool people into going long. In this case, that they think the end of the correction is here, they go long here, and then the price makes a new low, and it takes out all these people that had their stop loss sitting down here. And it takes those people out only to eventually go up. Very common, and a very common trap. Okay, but I understand in real time, this would look like, without the knowledge of foresight that we have now to see that this made a new low, in real time you see this happen right here where price was correcting, all of a sudden you see a strong bullish candle and you think, okay, that's the end of the correction, only to have it continue to go down. So this is what I'm talking about. Unfortunately, you're going to take some trades and some losers like that. Okay? And this is, again, where you have to practice good money management. And if you did do that, let's say, and you took a loss right here, and you saw price continue down, well, you still have another opportunity to get back in it over here, and then that would have turned out to be a winner. Okay? You got stopped over here. Potentially you took about a 15 pip loss. No, you didn't take a 15 pip loss. You didn't even take that big of a loss. Let's say you got in right here. You took your stop down here. Yeah, well, 14, 15 pips right here. Okay, well, okay, whatever. 15 pip loss. If you got back in over here when the real uptrend started, you would have made 56, okay? So that's a 4-to-1 risk to reward rate. Lost 15, you made 60, right? So, that's okay. And that's what I'm saying, okay? And you just have to live the fight another day, and just because you took a loss here doesn't mean the strategy's not good. It just wasn't the right timing, okay? But how do we know then that this area right here is just a correction that we're going to go back up? Because you see this moving average break, and you're like, oh, this is a reversal. I want to go short. And as it turns out, if you had taken a short position, let's say right here, you could have made about 24 pips. But I probably would have just let that go because I'm looking for the larger trend. So if I go out to the 1 hour and especially the 4 hour and look at this rectangle that I drew here on the higher time frame, here it is on the 1 hour, and we actually did have a break below on the 1 hour chart right here, okay, and on the 15, that's way over here. So this is a much smaller, if you had taken this short, it's about 13 pips. If we go out to the 4 hour, which is even better, you can see we never broke below. We didn't have this 10. We're not looking at the candles. We're looking at this 10 period moving average. Stayed above the 50. So this would have identified just as a correction. So again, you can use the 15 minutes for your analysis and your entry, because this is a plenty short enough time frame to do analysis on and find an entry with maybe a confirmation of the trend on the 4 hour chart. And again, because you're not going to be holding these trades as long. So on the daily chart, you can see technically the daily chart is still down. Okay, but remember, we're not looking for this to be for these to be long-term trades. So this would have been, easy pips to get on here, and this would have taken, if you had held it all the way to the top, 88 candles. So that's 88 15-minute candles. So that's divide that by 4, 22 hours. So this is less than 1 day. From this entry here up to here is less than 24 hours. It's about 22 hours. So that's what I'm saying. These are short-term trades. Okay? And, so now we are looking for long positions just based on the 4 hour trend. Okay? But again, yes, the daily is down, but again, we're not looking to hold these trades, for days and days and days or weeks at a time. So the daily's not as important. Now, if the daily also matched up, then golden. Then you could look at, to hold on to that even longer. Okay, if the daily chart was also showing in an uptrend, then that would have just been even more juicy confirmation to hold on to this trade longer. But the fact of the matter is the 4 hours still is up. And so on an ideal swing trade, short-term swing trade or day trade, this is really all you need. Okay? So that's it. If we look at something like, this is the pound Swiss. Well, this actually looks very much like the Canadian Swiss because we have the effects of the Swiss here. But again, we got this area right in here. Clearly very corrective. Okay? And we don't necessarily want to trade this short because we go to the 4 hour, we're clearly in an uptrend, right? Both the moving averages are pointing up. Price action has been above here for quite some time. Okay, again, on the daily chart, we're technically still in a downtrend, but we might be beginning a new uptrend. But we're technically still in a downtrend on the daily. But again, that's nice to look at, but I wouldn't base my decision on that. The only thing I would base my decision on that is how long I would consider holding this trade. If I took this long position, I'd be looking, somewhere like, where am I going to get out of this? As a potential profit target, somewhere up about where it is right now would be a good area. There's a lot of congestion you can see up in this area that could potentially cause a turn again on the daily. So that's, these are profit target areas, considering that you're going against the daily trend. Okay, but again, if the daily trend were up, then I wouldn't be putting nearly as short of a profit target on here, and maybe this one I would hold longer. Okay. What else? So, I don't know, I'm just picking something randomly. Here is the Euro Aussie. You can see we had this downtrend, then we had this move up, this crossover right here. So if we highlight this area, okay, go out to our 4 hour. See, the 4 hour is still down, so I would not have taken this particular trade to the long side. I'd be looking for a short. Price has been real choppy here. You can see this actually on the higher time is still kind of moving more sideways, but I think it's trying to set up a new downtrend. But anyways, but either way, again, in the short term, you would not be looking to take shorts, long positions here, even though we had this crossover, because the higher time frames are still pointing down. Okay? And we can just continue right through here. This Aussie Swiss has been like really hot. I mean, if you had caught this, turn off the scroll here. We basically had, let's see, this uptrend starting like let's just say right here. We had the uptrend start here. Okay, let's mark, well, we got this drawn on here. Then we had this big corrective move right here, and then you can see how well, this system has, would have called this. And all of these areas right here are all potential re-entry points, right? When the moving average, when the 10 period crossed back above, you have another entry signal here, another entry signal here. All through here, you wouldn't have exited if you were in it, okay? Because the 10 period never crossed below. You had another entry signal technically right here. Okay, so this is one where maybe you just would have held on to it, because this has just been beautiful. Okay, now if we go to the higher time frames, you can see this is when that new uptrend started. And on the 4 hour, we didn't actually make that. We didn't actually make this until about right here. Okay, that was when it actually changed on the 4 hour chart. So turn off the scroll. So back here, so you can see, this whole area from, basically from about here to here, this first 50 pips or so, potentially you would have left that on the table if you were just using the 4 hour as your confirmation. Okay, but again, in hindsight, you're like, well, you left 50 pips on the table, but you didn't know at this time that this was going to turn and start going back up. For all you knew, this was going to go make a new low, right? Because at the time we had this first blue line, price went up, and it did look like it was going to come down and make a new low. I mean, these are all red candles, but then it stopped, and that's actually a great signal. And this is what I was talking about by, not just blindly follow the signals, but price aggressively moves down and then fails to make a new low or even come back to the previous low. This is actually, a pretty bullish signal, okay? But forget about all that. Even if you didn't know that, this would have been your entry. Okay, so from here on, you still could have started looking for long positions from about here, and currently you'd still be potentially up 155 pips. Okay, so again, guys, excuse me. The purpose of this is just to talk about potential entries on a 15-minute time frame, analysis and entry on the 15-minute. Use your 4 hour as your confirmation time frame, and if the 4 hour doesn't match up, you could otherwise use the 1 hour chart instead. If we go to the 1 hour chart and we look at when this crossover happened on the 1 hour chart, okay, it happened right here. So it's a little bit quicker than the 4 hour. So here was the breakthrough on the 1 hour chart that we looked at before. This was the beginning of the uptrend on the 15. Remember, this is the 1 hour chart. So you potentially could have used the 1 hour chart and just taken the risk. You would have picked up about 30 extra pips if you were in this uptrend. So hey, I'm not scarfing at that. So it depends how aggressive you want to be, because again, you could end up being early and still have price move back down. So you can either use the 1 hour or the 4 hour for your trend confirmation to make sure it's going in the same direction as your 15-minute entry. And again, you can peek at the daily chart, and I would only peek at the daily chart to give you an idea of how long you want to hold the trade for. If the daily chart is counter trend to what you're doing, then just keep that in mind. Doesn't mean you don't take the trade, because again, these are designed to be kind of short-term trades anyways, but your profit target should be designed accordingly. If it's in line with the daily trend, then you can probably potentially hold the trade a lot longer. If it's not, then just be more realistic about where you're targeting for take profit. Okay? So that's what I wanted to say on all this, guys. So again, we have a 10-period linear weighted moving average and a 50-period exponential. And you can do this on pretty much any set of time frames. For more day traders or short-term swing traders, not scalpers. This is not like a 1 minute or a 5 minute. Although if you want to try it down there, feel free. I feel like the noise is just too much with moving averages when you get below a 15. So I think a 15 minutes plenty short enough. But 15 minute for your analysis and entry. 1 to 4 hour chart, depending how aggressive or conservative you want to be for your confirmation. A quick peek at the daily, just to help you with profit targets once you're in. and that's it. Or you can go back to what I originally was showing you with, which is, using the 4-hour as analysis with the daily chart as your confirmation, and those are trades obviously that you would be holding for a long, potentially a much longer period of time. But you got to be able to withstand the the swings that are going to come during that uptrend, because obviously it doesn't just completely go up, right? So if you were holding this through here, if this was a 4-hour chart in real time, you saw this move back down, you might be scared to get out right here because you see a couple of big red candles, but obviously it was just a pullback. So you kind of have that psychological effect of potentially giving back a lot of gains, especially on a higher time frame. So if that doesn't work for you, then you have the time to look at shorter time frames, then I think the 15-minute with the 1 and 4 hour for confirmation are a good alternative. But I wouldn't change the moving average length. I'd leave them just as they are, 10 and 50. Linear weighted for the 10 makes it a little bit more sensitive, and just use a simple exponential for the 50. All right. So I'll leave it there, guys. Just another simple technical strategy to potentially use. And like I said, moving average strategies, like any strategy, are not perfect. They're going to have their drawbacks. You're going to have a fair number of winners and losers. But practice good risk management and don't trade them in sideways markets. Okay, especially if the longer time frame that you're using for confirmation is consolidating and moving sideways. I would just stay away from that asset entirely until things clear up and trend again. Okay, so this is really meant to help you identify reversal areas potentially and trend re-entry areas, but just don't get caught up in the chop of a long-term sideways market. Not with this type of strategy anyways, because you'll suffer more losses than winners. So, all right, that's it, guys. Any questions, comments, please leave them down below. Smash that like button. Really appreciate it. Helps the YouTube algorithm. And if you're just finding the channel for the first time, hit that subscribe button and ring the bell notification so you get notified when I post new content. Hope you all have a great weekend, and we'll catch up very soon.